Markets keep advancing despite hot U.S. inflation. Dollar sags. Following a mostly negative start to the week, global stock markets erased early losses to turn positive nearly across the board. Wall Street stocks advanced as investors cheered Powell's testimony to Congress on Tuesday. The Fed governor offered a hint that he's in no rush to wind down the central bank's balance sheet. Powell highlighted that it could take up to 4 meetings to decide on the details of the plan. At the same time, he confirmed that the Fed's tightening plans include higher interest rates to ensure high inflation did not become entrenched. Asian equities followed Wall Street higher, aided by the persisting bullish bias in the oil market. The Shanghai Composite Index gained 0.84%, and the Nikkei 225 in Tokyo rose 1.9%. The Hang Seng in Hong Kong rallied 2.79%, while the Kospi in Seoul added 1.54% on Wednesday. Of note, regional stocks edged higher even as the World Bank has cut its forecast for global economic growth this year to 4.1% from 4.3%, citing supply chain disruptions. On the data front, the highly anticipated December U.S. CPI report showed that the headline inflation rose 0.7% year over year from 6.8% as expected. That was the highest reading since June 1982, and at that, the monthly pace of price growth as well as the core CPI came in higher than expected, albeit rose at a slower pace as compared to the previous month's figures. Investors appeared to be comforted by the fact that inflation was not worse than feared. Despite the results painting a strong inflation picture in general, the dollar dipped across the market in both a knee-jerk reaction to the report and later during the North American session. The USD index fell from the $95.60 area to notch 2-month lows just below the 95.00 figure. Earlier, the safe haven dollar slipped nearly across the board after Powell's speech. As such, the Euro USD exceeded the 1.1400 figure and registered mid-November highs in the 1.1450 zone during the early North American session, as the common currency derived support from intensifying sell-off in the greenback, with Treasury yields falling as well. The pound sterling USD pair climbed to late October highs above the 1.3700 figure, targeting the 200 DMA last seen in September. A weaker dollar, along with the prospect of rate hikes by the Bank of England, boosted the sterling. Meanwhile, European stocks added to gains on Wednesday amid the persistent risk-on tone in the global financial markets, with investors taking a U.S. consumer price index in their stride. The Pan-European Stock 600 closed 0.7% higher, with basic resources leading the gains. The FTSE 100 index closed up 0.8%, the CAC 40 stock index in Paris closed up 0.75%, while the DAX 40 in Frankfurt ended 0.43% higher. In individual stocks, Dutch health tech giant Philips plunged over 15% after the company said it would expected fourth quarter earning prospects to drop around 40% amid a global shortage of electronic components. The company will publish full quarterly and yearly results later this month. Wall Street stocks eased from early gains, but still edged higher on Wednesday as investors continued to digest the inflation report. The market now puts the chances of the Fed raising short-term rates by at least 0.25% March at around 75%. Elsewhere, the Fed's beige book showed that many districts said that supply chain disruptions are constraining growth, while economic activity across the U.S. expanded at a modest pace in the final weeks of 2021. The S&P 500 rose 0.28%, the Dow Jones Industrial Average rose 0.11%, and the tech-heavy Nasdaq rose 0.23%. Meanwhile, the Bitcoin prices derailed the $40,000 psychological barrier earlier in the week for the first time since September before bouncing marginally. In the recovery process, the largest cryptocurrency by market capitalization challenged the $44,000 level, but failed to get back above this hurdle and retreated partially. Late on Wednesday, the BTC USD pair settled just below this level, but on the positive side, the fact that the coin managed to affect the demand below $40,000 suggests that traders are not yet ready to push prices significantly lower from the current levels. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.